Fubo Stock Analysis, what's going on, guys? That's what we're going to be talking about here in this video today. Hope you guys had a nice, safe new year. Hopefully not too many people watching this video drank too much. But anyway, the grind goes on. We got to keep on keeping on, if you know what I'm saying. I'm recording this on New Year's Day. I'm pretty fired up. I hope you're fired up. Let's get right into it. So obviously, you're seeing this video on Saturday. I think I'm going to start with the Saturday uploads because the last Saturday upload actually did pretty well. Better than the Friday upload did, and I know Friday is not the best day to upload YouTube videos for whatever reason. People get out of work, maybe they're busy, whatever the case may be. We're going to try with the Saturday morning uploads. We're going to see how that goes for a little while, all right? So we are going to be covering Fubo in this video. We're going to be talking about some of the risks I see with the company, some of the things I like with the company. We'll go over the business model, everything we normally go over. You guys know the deal by now. We've been doing this a little while. Hope you guys enjoy this video. Hope you guys get some value out of it. I am pretty fired up, so you're probably going to see me very energized. I have had a lot of caffeine today. So if you guys do enjoy this video, if you do think I'm crazy, make sure you hit the like button. I would really appreciate it. That would help me out so much. Also, don't forget to subscribe to the channel as well if you want to see more videos like this pertaining to personal finance, stock analysis, and everything in between. So at the time of filming this, Fubo is around $30. I believe it's at $28. I'm not sure off the top of my head, but I believe it closed yesterday on New Year's Eve at $28. Around a $2 billion market cap. And basically what this stock is, it's a streaming service. So things you see like they're cutting the cord, like YouTube TV or Hulu Live, it's a product similar to that. This company is one of the leading digital entertainment companies for sports, news, and entertainment. This company actually started off as a soccer streaming service so people could watch their favorite soccer leagues. Then once that was done, the company decided to adapt and get into different sports like football, basketball, all those type of things. You can also purchase like different packages. So for example, you can purchase like the red zone on there if you want. Now the growth strategy that this company really goes about and what they try to execute includes accelerating subscriber acquisition, upsell and retain existing subscribers, grow advertising and inventory, continuing to enhance their products, portfolio, technology, those type of things, expand internationally, and enter adjacent markets. This past quarter, this company actually had a really good quarter. I was actually impressed with their numbers, but we're actually going to break those down a little bit why I think they might have been so good. But the subscriber count is actually up to 455,000, which was up from 288,000 in their previous quarter. So 58% increase, so great numbers from Fubo in this past quarter. They provided guidance for this next upcoming quarter or the fourth quarter of seeing between 500,000 and 510,000 paid subscribers. They currently have their average paid subscriber at 121 hours a month, which is actually a lot. It's very impressive. Think of it this way, that's like almost a whole entire week. As for the revenue, they did bring in $61 million in the past quarter, which exceeded their guidance, which was set at between 52 and 55 million. In 2019, the company increased their ARPU by 42% to $53.80. But they do have two forms of revenue, okay? Their main source is obviously the subscriptions. People subscribe, they pay money, they pay the subscription. But they also have advertisements, so companies will pay them to advertise different things on their platform, okay? But subscriptions are their big ones. Their two main subscriptions start at $65 for the family plan, but their elite one goes for $80. They also have one more plan, which is the plan for Spanish programs that starts at $30. They are affiliated with a lot of different networks, including CBS, New Univision Enterprises, AMC, Viacom International, Discovery, and more. They do have over 100 channels on their standard base plan, 43 of 50 on the big N-rated networks. They do also stream almost all NFL, MLB, NBA, NHL games, all professional soccer league games, as we talked about, because that's where they started. And they also do stream a lot of college sports and even more sports on top of that. The total number of sporting events that they actually stream per year is around 35,000, so it's really up there. So now that we've gone over the company a little bit, we've talked about kind of the basic fundamentals of the company, we're going to talk about some of the things I like about this company. And by continuing to watch this, you're going to learn more about the company. Maybe you guys like some of these things, maybe you don't. We're going to get into the dislikes after this. Make sure you're doing your own research, though. I'm not a financial advisor. I'm just a random guy who's all talking to a camera in my living room, okay? Anyway, so the first thing you gotta look at, and the first thing I like about this company, is they're in a growing industry, and it's a rapidly growing industry. I personally see this industry blowing up over the next couple of years. I think more and more people are gonna transition out of cable, which we're gonna talk about in a second, and they're gonna pick up these streaming services like Fubo or YouTube TV, Hulu Live, like those type of things. I just really see that happening. The potential market size for this company is projected to be around $150 billion by 2026. So how much are they going to be able to, how much of that total addressable market are they going to be able to capture? We're going to get into that in a second, but that's a pretty big market. That's a pretty big market size, and it's got a compound growth rate annually of 18%. That's a really rapid, that's actually really big. Like that's bigger than the veganism industry, which we talked about in a couple of different videos. It's pretty big. I like it a lot, and there's a lot of good things that are going to come out of it. They're supposed to reach, or they're projected to reach 49 million households in 2020. That's a lot. That's a lot. let me tell you guys, that number is only gonna go up. But on top of that, look at it this way. So the average cable bill is $110, okay? This is $65. YouTube TV, $65. Hulu Live, $65 a month. So you're almost saving like a little less than half. Obviously, I don't know exact percentage off the top of my head, but you're saving a significant percentage on your cable just by switching from the cord to a streaming service. And on top of that, you can take it anywhere. Like say you're on vacation or you're in, I don't know, up in the mountains or anywhere, so anywhere with Wi-Fi, you can watch it on your computer, your laptop, your iPad, you can watch it, you have that right. So I think this is gonna transition into more and more people buying some of these services. And on top of that, they wanna get involved in the sports betting industry, okay? If you watch my DraftKings stock analysis video, that'll probably be linked somewhere in here. One of the cards up top will probably be linked here about the DraftKings stock analysis video. But if you watch that, you guys know I'm very bullish on the sports betting industry. You know, that's another industry I just see going up and up and up and up. And it's one I'm just really excited about overall. So look at it this way. Here's my thought process. So this is how I operate. This is what I do. On the rare occasion, I bet on a sports game, and I mean, it's very rare. I can't even remember the last time I've done it. But if it's, you know, sometimes it's nice, you know, like the Super Bowl, maybe a couple college bowl games, whatever the case may be. You throw up, you know, $10, $20, $50 down. It's just fun. Fun money. Like same with DraftKings or FanDuel. You pick a lineup. It's fun. That's the bottom line. I think it's fun as long as it's money you can afford to lose, I guess, at the end of the day. Anyway, but think of it this way. So someone bets on a sports game, right? What are they going to want to do? They're going to watch that game. You know, why would you bet on a game you're not going to watch? I feel like that's senseless. Obviously, maybe you don't want to watch it if you bet your entire life savings on it and it's just too stressful. But anyway, besides the point, guys. So bottom line, if I bet on a game, I'm going to want to watch it. So I feel like a lot of people are like that. Where's the best place to do that? Fubo. So Fubo is attacking two huge growing industries with two huge market sizes that are only going to grow. I'm not sure exactly what the sports wagering industry has for a compound growth rate off the top of my head. I think it's pretty substantial. I think it's like maybe 15%. So we'll say 15% for the sake of the argument. Obviously, make sure you look that up because I'm really not sure off the top of my head. I should have probably prepared that for this video. But you got 18% for this streaming service. Then you got another 15% on the sports betting industry. And honestly, guys, there's just a lot. These two industries I really think are gonna blow up. And I feel like this company does have potential to be a big player in both these industries. I really think that because they're really, I don't know, I just don't know. I don't even know how to explain it to you guys. That's how fired up I am about how bullish I am on these two industries. But, so you're probably thinking, am I adding this stock? Am I buying this stock? And here's the thing. I'm not adding it for a lot of different reasons. One, because, well, honestly, at the end of the day, I think I'm already a little too over-diversified. I actually kind of want to sell off of a couple of positions and put that money into stocks I really am bullish on the long term. But in addition to that, I do have some great concerns about this stock, and we're going to talk about those in a second. But first, before we start to get in my bearish thesis, I guess you can say, around this stock, or why I'm not buying it, and kind of the risk and concerns I have. First of all, they obviously, you guys probably have known this if you've watched any of my videos, they have a recurring revenue business model and they're also founder-led. Now, if you guys know that, you guys know me, you're gonna know that that's the holy grail in my mind. Like a recurring revenue business model, because obviously you can project your revenues, it's easy to run that business. Big plus in my book, okay? And it's founder-led, so it's like their baby, you know what I mean? You just don't have that same passion, that same want that someone who takes over the business midway through or whatever has, because it's just your child, it's your baby, you wanna make it grow. In addition to that, they also have a partnership with Floyd Mayweather. Now, why is that important? Why is that important? First of all, I honestly, whatever you like think about Floyd Mayweather, that's your own opinion, but I think Floyd's actually a phenomenal businessman. I really think he is. And what's he doing in 2021? What is he doing in 2021? He's fighting again. Granted, he's fighting Jake Paul, so I mean, obviously it's not that big of a fight, but I really think there's some really big Floyd Mayweather fans out there, and I really think a lot of people are going to watch this fight because obviously you never know how many more he's going to do. But I really think a lot of people are going to watch this fight. He's coming out of retirement for this fight, and Fubo is probably going to be the main player, the main streamer for that fight. So that really excites me, and I find that very interesting. But there are a lot of concerns I have about this company, and we're going to talk about those right now. So as for my concerns and risk for this company, there are a lot, and we are going to talk about them. So the first one is they're very heavy on their subscriber revenue. That's where the majority of their revenue comes from. They did $53 million in revenue compared to $7.5 million million in the last quarter. So what happens if they can't maintain subscribers? What happens if they can't grow subscribers? They're obviously going to take a hit. And if they can't grow subscribers, obviously that means their advertising revenue is going to take a hit as well, because if people aren't coming in and people aren't watching, why would anyone want to bid on, or why would anyone want to place ads on this streaming service? Why? Like, there's literally no reason. There's 100,000 different places companies can advertise that are way better if subscribers are not here, okay? So if they can't do that, that is a very big issue. That's a very big issue, and that's a legit concern. Secondly, they have really big losses. They're taking huge losses right now. They took $302 million in losses last quarter in operating losses and a net loss of $274 million. That's some big losses. This is a newer company. Personally, I would like to see a little bit more of a pathway towards profitability before I consider putting my hard-earned money in a stock like this. But you guys got to make your own decision. That's just something that really concerns me. On top of that, the debt, okay? The debt. They have very high interest rate debt on some of the loans. And I'm not talking about like 7% or, some are 8%, but one loan is 17%, one's 13%. That's really high interest rate debt. And that's something that really does concern me. And this loan that has 17% interest, it had a contingency on it, okay? It had a contingency that they had to maintain a certain amount of subscribers. So what happens if they cannot maintain those subscribers? What happens? That's a legit concern. Then you know what's probably going to happen? First off, it's probably going to be harder to get loans because people aren't going to want to give them money because they're viewed as a higher risk. Secondly, that's probably going to come with higher interest rate debt. That 17% might turn into 21% or 22%. It's a legit concern. It's something I don't think will happen, but it's a risk. It's something you got to take into consideration. On top of that, this new strain of this virus that's out, how bad is it going to get in the United States? Obviously, you guys have probably been keeping up with the news because there's nothing else to do these days but watch the news. Anyway, so what happens if this new strain takes off and we kind of go back into lockdown, or we go back into square one? What happens to sports? What happens if sports have to shut down? Do I think this is going to happen? No, because I think people are getting more to the point where it's like, we need businesses open, we need money, the economy's just going to take forever to recover. I don't think sports are going to shut down again, but what if they do? I'm not always right. It's something you've got to take into consideration when looking into a stock like this. On top of that, sports viewership. When sports restarted in June, July area, it was tough. It was tough. Sports viewership was down. So what if sports viewership doesn't come back? What if people have these other hobbies they're interested in now? What if they're more into stocks? What if they're more into being outside, bike riding, anything? What if they have hobbies and they honestly don't care about sports as much anymore? I personally have had a harder time getting back into sports. I'm putting more and more time into stocks. Don't get me wrong. I love sports. I'm going to continue to follow sports, continue to watch sports, but it's not as a big concern as it was to me before everything went into lockdown. And I'm sure a lot of other people are like that, and a lot of other people don't have the desire to watch sports. Now, do I think sports viewership is going to stay down? No, I don't think it's going to stay down. I think especially once you see fans get back into the stadium, you're going to see that go up again. But it's a risk. It's something you have to take into consideration. On top of that, this company had great numbers last quarter, okay? They had great numbers. Fantastic earnings. I listened to the conference call. It was a much better quarter than they could have ever imagined. The CEO was really fired up. He was really excited about the quarter. I have concerns about that quarter. Why do I have concerns about that quarter? Obviously, sports started in the last quarter. So more people are going to watch sports. What does that mean? More people are going to want to buy this streaming service, right? More people are going to want to buy it because they want to watch sports. But since all sports really restarted around a similar time frame, all sports were going on at once. So more people wanted to watch, obviously, they wanted to watch the Red Sox and the Bruins, or their baseball team and their soccer team and their hockey team. They wanted to watch all of them. So Fubo is one of the best places to do that, right? But what happens moving forward? What happens as we move back into more traditional times, modern times, where, baseball and basketball are not on the same time, and football is not on at the same time hockey is, and all this stuff, and there's one sport. It's what happens next summer when just baseball is on? I don't know how many people are going to sit there and watch 5 or 6 different baseball games as opposed to maybe a baseball game and a hockey game and a basketball game. I don't know if it's going to see as much traffic, and I don't know if it's going to do as well as it did this year. So it's something I have. That's a concern I have. That's a legit risk I have. That's probably one of my biggest risks on this list. I do have one more we're going to get into in a second, but that's one of my biggest risks. On top of that, this was an election year. They said in the conference call they saw about 15% more traffic contributed to politics. Obviously, you're not going to see an election year every year. You don't have to be a rocket scientist. You don't have to be an investor. You don't have to even have to be smart to know that. You just know that you're not going to see an election year every single year. It's a fact. So that traffic's obviously not going to be there every year. They're not going to see that 15% growth every year, or really any growth at all, just from politics every year. So that's a legit concern. So they saw a lot of growth last quarter due to basically the stars aligning. So I need to see a little bit more out of this company before I get into it. Now, There's also one great concern I have, and I didn't even write it down on the board. I was so concerned about it. So look at these charts here. Obviously, more people are moving towards streaming services, TV streaming services. You can definitely tell by the chart. It's just going to keep going up, I really believe. I think you're going to see a steady upward trend in this chart. But where I really struggle here is that people are going to be pulled away from YouTube TV and Hulu to compete, okay, to go to Fubo. Now, if you look at Fubo on Google Trends, it's up. Especially the last 6 months, it's up, and it's been up significantly. If you look at YouTube TV, it's also up. It's a steady uptrend. But if you look at Hulu Live, it's a little bit choppy, especially over the last 5 years. So someone might look at this, and they might think, well, Fubo's gonna just blow Hulu Live out of the water. Here's the problem I have. So Hulu has about 4.1 million subscribers already, okay? But they already have the brand built. That's the most important thing. I know so many different people that have both Hulu and Netflix because there's something they can't watch on Netflix that's just on Hulu. They have their brand built. That's so important. I'm sure if you ask most people about Hulu, they're gonna know exactly what it is. That's just a fact. I really feel like most people are gonna know what Hulu is. They might not have it, but they know exactly what it is, and they're familiar with it, and they're familiar with the streaming service. I feel like Jeremy with this iPad here. I just got this for Christmas. Anyway, so people might have actually had Hulu in the past, maybe for, you know, movies, TV shows, stuff like that, and they saw Hulu Live and they're like, you know, I can cut down on my expenses, my cable bill by, you know, $50, $60 just by switching to a streaming service. I already have Hulu. I already paid $12, $13 a month, whatever it is for it. I might as well just upgrade to Hulu Live. So I'm only spending another $50. And then on top of that, I don't have to pay the $110 cable bill. I feel like a lot of people are going to do that. And I feel like Hulu could be a really big player in this space. I really feel like that from everything I've seen. Hulu might be the one. But I also have one more concern about YouTube TV. Guys, honestly, YouTube TV has one of the best advertisements, and that's YouTube itself. Think about it. Every time you go on YouTube, you see ads. A week free trial for YouTube TV, 2-week free trial for YouTube TV. Sign up for YouTube TV today. You have all these free trials, and more people are watching YouTube. YouTube, I think, is the next TV. So I think these two players can be the most significant players in this TV streaming space. And then here's the real big thing, and this is where you have to like talk about like psychology, and this is where like if you really want to be an investor, you really have to understand people and how people operate. What do people really like? People like to be comfortable. They don't like to be uncomfortable. They like to stick to things they know. Even if you show them a path, they might not do it because they're not comfortable with it. I think if everyone was comfortable with being uncomfortable, you would see a lot more people investing. You would see a lot more people taking control of their financial future. You would just see a lot more people taking control in general. But the thing is, people like to be comfortable. If they're sticking to something and it's not killing them per se, they're probably going to stick to it even though there's a clear path on the other side. YouTube TV already has about 3 million subscribers, and honestly, I see that number going way, way, way up. I know I said I see Hulu being one of the biggest players, but I see these two really. These are the two. I really think these are the two. And I'm sitting there thinking, I'm like, can Fubo really take enough subscribers away from YouTube TV and Hulu Live to where it's worth my time as an investor to invest in this company where it's going to make me money? Don't get me wrong. I think in the long term, I think this company is going to do well. I really do think this company is going to do well. I am bullish on this company long term just because it's such a big space, and I feel like more people are going to transition to this space. But I'm like, is this the best place for my money? Is this the best place for my money? That is how I'm looking at it. Do I see any other investment opportunities in the market right now that are more appealing to me than Fubo? And honestly, the answer is yes. I'm very bullish on a lot of different companies. Obviously, Dropbox, you know, I'm heavily invested in. Beyond Meat, there is another vegan company I really don't want to talk about because if you watch any of Jeremy's videos, you're going to know exactly what I'm talking about, and I really just don't want that hate because if I talk about a stock, forget it. Like, you know, Jeremy talked about it, you talked about it, you're copying Jeremy. Yeah, shut up, okay? Anyway, guys, that's going to be it for this video. That's what I want to talk about. I really hope you got some value out of it. If you did, make sure to drop a like on the video. That really does help me out in a massive, massive way, and it only takes a second of your time. Also, don't forget to subscribe to the channel if you want to see more videos like this. Let me know down in the comments what you're thinking of Fubo, if you're buying it, if you're invested in it. I'd love to hear from you guys down in the comments what you think of the stock and where you think the stock's going to go over the long term. Anyway, thanks for watching. Have a good one, guys, and I'll see you in next week's video.